Hi there, Shingirai here again with another update on portfolio performance on the past week. On a 1 week basis, 4 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from minus 0.04% for CBAM portfolio number 1 down to minus 0.89% for CBAM portfolio number 5 on a relatively risk-off week. We saw some weakness from the S&P 600 smaller companies in US equity, and that was down 2.66%. And then some weakness as well in the UK equity markets, where the LNG UK 100 was down 2.02%, and the MSCI China was down 2.55%. In terms of positive contributors to performance, JP Morgan Japan, again, we saw some strong performance here on the back of a lot of companies coming out during earnings seasons and now announcing share buyback programs, and thereby boosting the equity markets in Japan. And that would see JP Morgan Japan as a top performer on a 1 week basis, up 1.81%. And then we did see some respite as well in terms of performance of the UK fixed interest markets, and that would see some recovery from LNG UK gilts up 0.57%, alongside LNG sterling corporate bonds up 0.62%. Moving on to year-to-date basis, 9 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from 3.46% for CBAM 1v2 up to 17.09% for CBAM portfolio number 5 in what has been a majority risk-on year-to-date period. Detractors from performance, as usual, we expect to see some weakness there on the year-to-date period, on a risk-on year-to-date period, where we saw 91 Global Gold miners down 5.98% as investors flocked to higher returning equity markets. We also did see some weakness in the global bond space, with Invesco Global Bond down 4.31%, alongside weakness from LNG UK gilts down 3.90%, both on a sort of anticipation of some Bank of England interest rate hikes towards December. Moving on to positive contributors on a year-to-date period, equity Indian subcontinent continues to enjoy strong performance and being rewarded by the performance of the mid-cap equity space in India, and that would see the fund up 47.95% on a year-to-date basis. And then again, we consistently see some strength in US equity markets in this post sort of pandemic low recovery period, and that would see the S&P 400 up 27%, where you'd see the S&P 500 up about 26% on the year-to-date period.